everybody. My name is Jeff Green, president of Green Team Realty. Thank you for joining us for the July 2020 housing market update. Interesting times. Things are moving quick here. We're already into July, well into July. So let's jump right in. There's a lot to talk about as far as stats and information and where things are heading, so on and so forth. All right, so jobs. The consensus by various experts, so to speak, was that the United States would add 3 million jobs in June, but that was superseded. 4.8 million jobs were added in June. So that's a good number, but there's more to it. Stay tuned. So the Bureau of Labor Statistics unemployment rate right now for the month of June was 11.1%. You can see back in February it was 3.5%, March 4.5%, and then boom, COVID hit, jumped up to 14.7%. So overall, the unemployment rate is trending downwards. That's a positive thing, but again, it's a little bit more complicated. So let's keep going. As temporary unemployment drops, permanent job losses keep rising. Okay, so this is a key indicator here. Core unemployment rate, which subtracts the temporary layoffs and adds unemployed who didn't search for a job recently, jumped to 5.9% in June from 5.0% in May. Okay, so that's a very important thing to take a look at here is, how many companies are actually going to bring the jobs back, right? That's the key. So here's a look at the core unemployment rate. And as you can see, it's been rising since December, really. But historically, okay, if you go back to April of 2010, it's just below half of that mark where things were in April of 2010. So it's on the rise, but it's historically very low. So it's a mixed bag, right? And I think what everyone that you're going to see here in our numbers and what we're discussing today, what a lot of the experts are just, wrestling with is whether or not these jobs are ultimately going to come back. We're starting to see more furloughs, so to speak, that are being converted to permanent layoffs and positions basically being eliminated. Delta Airlines is one good example. They just cut a lot of different routes that they were going to add this summer, so they've laid off quite a few people. That those jobs just indefinitely may not come back. All right, so the jobs report is a mixed bag. So let's get into real estate specific metrics here for where things are headed. Now, you're going to start to hear a lot about forbearances, foreclosures, so on and so forth in the media. All right, I'm starting to hear the chatter. I'm hearing people that I know locally start to talk about it. This is a very important thing to take a look at, okay? Of all the active forbearances that are past due, okay, and mortgage payment, 77% of them have at least 20% equity in their home. And 60% of them, you can see here, have 30% or more equity in their home. That is key information because not many people are going to walk away from money that they have, right? So in theory, as long as pricing stays intact and doesn't plummet, lots of people will have equity in their homes and they will fight to do what they can to keep themselves in their home, keep their mortgage going so that the bank does not take the asset back from them. That would be leaving money on the table. Very few human beings want to do that. All right, so that's a key thing to know. Now, let's take a look at just general showing activity, okay? It's up big time. All right, you can see here showings. This is from showingtime.com, which is a major player in the space of booking showings for those of you who are not in the industry. It's a software system that we all use to manage the scheduling of our showings. You can see that they're way up, okay, way up from where they were in January. But you're saying, okay, well, January is not the busiest months. Spring and summer are. So does this maybe look historically correct as where it maybe should be? Well, no, actually, year over year, buyer viewing appointments are up 21.5% from where they were last year. That's a very substantial increase. All right, you can see as they break it down by sector, Northeast 19%, South 23%, Midwest, West, so on and so forth. So showing activity is up big time. all right, which is ultimately shows you that a lot of people are willing to make a move, want to make a move, and are trying to make it happen. But here is the key, okay? This really tells us everything we need to know, and as I'm going to show you some stats from a national perspective, the number of units sold is way down, but this is the reason why. And we've been talking about this now for 18 months, inventory, right? Inventory has been a problem, but it is an exacerbated problem right now. It's even worse of a problem. So if you look at this, this is a long run average. The long-term average of the number of households that are on the market is historically 2.5%. Right now it's 1.2%. So it's down big time. There's just simply not nearly as many homes that are normally on the market this time of year. So what does that say about prices? Well, it's supply and demand, right? When there's so much demand, you saw a 20% national increase in showings. That means people want to buy, they have the intent to buy, but we just saw that the inventory is really low. So what does that mean? Well, it means that prices are going to go up, very simply. So you can see that most experts agree, at least according to this chart here, right? There's some, formidable names on this survey. And by and large, most of the boxes are green, which means that most of them are predicting price increases for the next 2 to 3 years, which I tend to agree with. Okay, so one last chart before we get into the actual numbers that I wanted to show you is look at where people are looking, right? This is almost a complete shift to where things have been over the last 20 or so years, where population centers were moving towards urban centers. They were moving to the coasts. They were moving to more densely populated urban areas, and now it's a complete flip, okay? So now you're seeing that there's a greater desire for rural, the greatest desire for rural, not even suburban, but rural, suburban, and urban. So it's almost a complete flip, which is interesting. So here are the actual raw numbers, all right, from National Association of Realtors, existing home sales. You can see that it was basically flat from April to May. Is about, call it 370,000 units were sold in the month of May and April. Still a big number, but not where it was in the last couple of years, right? So we're just seeing not nearly as many units being sold. Now, of course, transactions take time to close, and this is showing you closed transactions. So of course, we're going to see a little bit of a lag here, but as time goes on and we've come out of, the lockdown, so to speak, the numbers should start to get a lot higher, assuming that there's enough homes on the market to get it higher. And you see almost a little bit of a dip here in price, which is interesting, but not down from last year, not year over year, not a decrease year over year. Months of supply and inventory is growing, okay? So that means that homes maybe are staying on the market a little bit longer, okay? So there's maybe a little bit more inventory, but nothing drastic. Now let's take a closer look locally. Orange County units sold. You can see things are on the mend, they're on the comeback here. Still the lowest of 5 years, which is a pretty significant number. Average sales price, upwards of 300,000. That's a very good number for Orange County. We haven't been at that level in some time. So that's where we're at there. Now let's go down south to Sussex County, New Jersey, and we take a look here. The units sold is hanging in there, right? It's not the lowest of 5 years. You can see it's been a little bit of a mixed bag, but it's been doing well. And the average price is on the up and up. So good signs for Sussex County for sure, and Orange as well. All right, some housekeeping before we get to our panel. The next housing market update is always the third Tuesday at 2 p.m. That happens to land on August 18th. Hope you can make it. You can always stay tuned and watch us. Stay in touch with us by going to greenteamrealty.com/HMU. And of course, thanks to the team at Really, the Business Referral Exchange, for being our sponsor. All right, panel. Let's talk it out. I see, let's go through our panel first. We're in the gallery view right now, so we can see you. So Tony Croyce, just wave your hand. Tony Croyce from Green Team New York Realty. Pamela Zakowski, wave for us. Green Team New Jersey Realty. Karen Gonen from Green Team New Jersey Realty. Ken Olasino from Family First Funding. That's Ken down there in the middle. And Christy Anderson from Green Team New Jersey Realty. Great. All right. So a lot to digest, a lot of things happening. It's an election year. There's a lot of politics. There's a lot of emotions. It's kind of a crazy time. We're showing homes and masks and gloves and filling waivers out and all these different things, right? So, Tony, your perspective on kind of where things are headed in the market. Have they been busy? Are you experiencing this intense situation? Give us some insight on what you're thinking.
One thing I will say with certainty, the real estate market has been busier than expected. The pandemic has prompted many residents to rethink their home, and some have decided to leave the city in favor of the suburbs and more space. And with a limited number of homes for sale, many sellers are receiving competitive and multiple offers. Also, what I'm finding is that buyers looking to move quickly may be willing to make greater compromises in their preferences than they were just a few months ago. So while move-in ready homes are still high in demand, buyers may not be so quick to dismiss those that need a little more TLC and may be willing to put up with, for example, a dated kitchen to gain another item on their wish list, like a private backyard.
Right, right. Pam, your thoughts?
Yeah, I see the same thing as Tony. A lot of competition of the few houses that are out there. A majority of my clients are coming from city or densely packed areas and want more space and privacy than they got where they're currently living. So yeah, it's pretty much mimicking that here. Really, really a lot of competition right now. I mean, houses aren't lasting a week.
Yeah, yeah. Karen, you and I have been talking a lot about the market. Congratulations on your second quarter sales leader award once again.
Thank you.
Yeah, so when we were doing the photo for that, we were talking a lot about just how crazy the market is. And, it's been a great year in many respects for you and for many others in the industry, where we weren't sure where things were going to go, with COVID and the onset, but it's turning out to be a very busy year for many realtors. Are the bids getting really high? Are buyers really having to go a lot higher than the ask?
So I think for us in our area, what's really important for agents and for buyers to remember is that we still have such a thing that's called an appraisal. It's great to get above asking, but if the house has a mortgage on it and we need to have it appraised, the deal will fall through. So it's really important that you're working with someone who knows the market and knows the market well enough to tell you, hey, I know you really want this house, but if we go another 10,000, we're not going to appraise and you'll lose the house anyway. What I have noticed is that a lot more buyers are coming with cash because they're coming from New York City and the surrounding areas. There isn't as much usage of mortgages, in which case an appraisal doesn't matter. But the buyers from New York are a lot more educated than the recent buyers. And one of the things that they say to me that they normally, I haven't heard in a long time is, but is the house worth that much? So I started explaining to them normal market value and Corona market value, because it's important that we educate our buyers and we let them know that, hey, you're buying the house about 10,000 above market value, but a lot more people are looking at the backyard and what it has to offer. And if you're on a lake community, as opposed to others, I think in anticipation of the second wave of the virus.
Yeah, good. So Ken, I wanted to bring up the appraisal issue with you. I'll come back to you in just a second. I want to hear from Christy first. But appraisals have definitely been on my mind. I'm glad, Karen, that you brought that up. Christy, what are you thinking out there in the field? Do you have anything that you want to add? Any additional information?
Well, I agree with Karen that the appraisals can be an issue. So I have also talked to agents about that. I actually had a listing that somebody came in with $40,000 above asking. And we actually chose a different lower offer. We actually had 4 offers. And we actually chose one that was less because of that same issue. I really did not see how it was going to appraise $40,000 above.
Yeah. Are you seeing a lot of cash offers? Full all cash as opposed to mortgage contingency?
I'd say it's about 1/3 cash. It depends if you have a city buyer or a first-time home buyer.
Right.
Most of the city buyers have cash. A lot of the first-time buyers that I'm getting on my listings don't have cash.
Right. Those rich city slickers coming up here to the country and throwing their cash around. Good for them.
Yeah, we like it.
Cash is king. It gets it done. It definitely makes a big difference in an offer, especially like, Karen and Christy been saying, in an environment where maybe there's not a lot of comps to substantiate, a much higher inflated price. Cash is king. So Ken, are you having a hard time with appraisals? What's the deal?
Actually, not yet. Everything that I've got coming through is appraising very close, slightly more than the purchase price. When I say close, I'm talking $3,000-$4,000 above the purchase price. The issue that we're going to run into with appraisals, and I mean, I've talked to Christy, Pam, and Karen about this, is that when you get first-time home buyers that are looking for the seller's concession, a lot of times that seller's concession can blow you out of the market once the appraisal comes through. And that's where a seasoned realtor comes into play. If this house, if they know it's going to appraise for that additional $6,000-$8,000 to cover the closing costs, then we're relatively safe. I don't see that as continuing because I think house prices, according to even your charts, house prices are going to increase slightly just from an economic demand standpoint.
Right.
And I think what's going to happen is the appraisers are much different today than they were 15 years ago in that they're very conservative. What I'm saying is they're very conservative. They're very in tune with what the market will bear. And they're not going to give you a inflated appraisal number. So, but so far, knock wood, the appraisals that I've been working on, the people that I've been working on, their appraisals are coming in slightly higher, not exorbitantly higher like they have in the past.
Okay, and those, so now just to clarify for people watching, you're saying that they're coming in slightly higher than the agreed upon sale price.
Right.
Now, those agreed upon sale prices may be substantially over the asking price, correct?
Mm-hmm.
Okay, so but in all of those cases, you're still seeing, even when there is an over asking price agreed upon between the two parties, those appraisals are still coming in, even though it's much over the asking price, the list price.
I still have clients calling me up and asking me if they should offer below asking price. And I said, no, because somebody else is going to come in and offer what they're asking. And I said, I'm seeing people offering prices that are above asking.
Right.
So, this
and
is.
the appraisers don't seem to be fazed by that yet.
No, not really. No,
Yeah.
I mean, as far as the asking price versus the purchase price.
Right.
No.
Yeah.
I mean, they're relatively, so far, they're still, appraising per the comps, and the appraisals are coming in reasonable. I think I've only had one in the last 2 months that came in below asking price or purchase price.
Okay. Well, that's good to know. That gives us confidence, right, ladies, as listing agents, that maybe we can take that higher offer, that we can recommend our sellers that, maybe go for the extra 10 or 15 or 20 grand. At the end of the day, it's the client's decision. We simply advise them. But, it's always in the back of our minds because those of us who have been in long enough have had problems with appraisals. It's just part of what we deal with in this industry. Okay, so.
Can I interject for a second?
Yeah, go.
I just wanted to let everybody know, and I'm sure the rest of the team will agree with me, that the list prices are now a good $20,000 to $30,000 above what they would be in a normal summer market. You have houses that are being listed at like 415, whereas if this were a normal summer, they'd be listed at 399 or even lower. So the appraisers are trying to work with us. They're taking comps that have just sold in the last few months as opposed to farther away, meaning before Corona market. But the listings are being listed much higher than they should be in a normal market. So that's something else to keep in mind. I had, for instance, a lady that said to me, well, this realtor said she could sell my house for number X. And I said, I respect that and I understand it, but the problem is that your house in a normal market is only worth this much. So I'm not going to promise you that I could sell it that much higher because we have to deal with appraisals. So they're already listed higher than they're actually worth in a normal market. So far, it's been working out. So obviously, everybody's happy. The sellers are selling for more. Realtors are getting a higher commission, but that's something else to keep in mind.
Yeah. Okay. So I want to try to bring it back from the lens of a seller and the lens of a buyer, right? So if I'm a seller or I'm a buyer, you know, what advice would this panel give me? All right. So show of hands here, Ken, you included. Who thinks it's an ideal time to sell? I'm raising my hand when I say yes to. All right. Christy Anderson does not have her hand up. She's the only one that does not think it's an ideal time. Christy, why is that?
Oh, yes, I do.
Oh, you do. All right. Yeah. All right. So what about the buyer side? Is it an ideal time to buy?
Yes, 3% or lower.
Right. I think that's the key, are the rates,
Yeah,
right? Is the rate.
Absolutely.
Because you start to think about pricing and it's ticking up and you say to yourself, well, why would you want to buy? But the rates are so low. They're at all-time lows right now. The other thing that I would say to every buyer, right, is, well, what is your alternative? What is your alternative? To continue renting and to keep giving a landlord money and making them wealthy, or do you want to start to build equity in your own home? You know, and I think a lot of it has to do with your view on how long you're going to be in your place. You know, maybe if you're only going to be where you're going to be for a year, maybe it doesn't make sense to buy right now. You know, but if you foresee yourself being somewhere 5 to 10 to 15 years, it almost doesn't really matter at what point you buy if you have that long of a view, because no matter what market cycles may happen, it'll come back during that time. And where we stand today is proof positive of that, where things got so far down after 2008, 9, 10, 11, 12, 13, 14, 15, and really things just finally started in our area, in the Northeast area, in 16 to come back around. So, all right. What about jobs? Are you guys, you know, we're all common people, right? We're not people who are, you know, famous and wealthy and all these different things. We're pretty average people here on this panel. At least I consider myself to be. I don't know if I'm, you know, devaluing anybody on this panel in your own eyes, but we are in the trenches. We're dealing with everyday people. Are you hearing about job losses? Is anybody starting to hear that their friends or family or people that they know that are laid off and are not going back, that their job has been discontinued and it's not coming back?
I have, yeah, some of my clients have been getting in touch with me saying I'm putting my housing search on hold because I've been laid off or I've been furloughed. Not so much family members, but definitely clients have been getting back to me and says, we're putting this on the back burner for now because, you know, we're not going to be able to get a mortgage because we have been laid off.
Anybody else?
I just went on a listing appointment the other day, and the gentleman's been laid off since November and was looking for a job, but then COVID came along, and so now he's definitely not able to get another job. So not furloughed, but can't even get a new job in the field he was in.
Right. right, being pushed out of his expertise.
Mhm.
And
Yeah.
I'm hearing things about people who work in the private school sector. Now they're starting to get information from the governor about school openings and looking at the numbers. So they're assessing how many teachers and employees that they will actually need this coming school year, and many are being laid off.
Yeah. Yeah, there's a lot of budgetary problems that there really is no solution to other than making cuts. So it's going to be interesting. I think, we have a very mixed bag right now. The real estate market is zooming. It's almost a surreal time, right? Because so many negative forces are out there in the world, yet the housing market is doing so well. And I guess, I was going to ask if anybody on the panel has any predictions as we wrap this thing up. Does anyone want to throw a prediction out there of any sort as it relates to the housing market update? Go ahead, Karen.
I was just going to say, I think it's going to remain a seller's market, at least for the next few months. I think a lot of people are now rushing to buy and will continue throughout the beginning of the new school year, because they're going to realize that who knows what's going to happen. Do I want to homeschool my kids in a tiny little apartment, or do I want to raise my kids in a house with a big backyard or a pool or a lake or something else that they can do? So I think people will be pushing through to get more houses that have a backyard, a more rural area, an area with activities that they can just throw the kids outside and do their work online as they need to, but the kids have entertainment, and obviously Sussex County has plenty of that.
Okay. Any other predictions?
Everybody that I listen to, the industry experts, are saying that the interest rates are going to remain low through next year. I'm seeing that they're dropping, not significantly, because they're low to begin with.
How much lower can you go? Yeah.
Really. But the reality is, the lower the interest rates go, the more purchasing power our clients have. And I'm also seeing a mass exodus. I've got a lot of clients that are coming from Brooklyn, Staten Island, the Bronx, even Westchester, and going out to, Sussex County, the Poconos, Orange County. So these people and a lot of them do need mortgages, and a lot of them have really, really good credit, and they're getting exceptional rates. So, but these rates are going to continue through next year.
Just a matter of finding the home.
The expert.
Yeah. I wonder though, I wonder, I think my prediction is that a lot of these people who are moving up this way, and a lot of them are second homes, a lot of people are keeping their footprint in the city and are coming out of the city for a second home to essentially weather the storm, so to speak, right? Kids aren't going to be back in school. They just need more space. So my prediction is a lot of these people we're gonna see another shift popular. I think they're gonna go back down to the city over the next 2 to 3 years. I think that's gonna happen. We saw a similar, coming and going after 9/11. This is different, of course, because now technology is much further advanced in terms of Zoom meetings like we're doing right now, and telecommunications, so on and so forth. But I think at the end of the day, there's still a lot of value in people being in buildings, working together. I have a lot of discussions with a lot of different people who are business owners, employees, this, that, the other thing, and a lot of people miss their offices. They're like, oh, I can't wait to get back to my office. So this idea of remote working is nice, but I don't think in a lot of cases it works. So my prediction is that a lot of people are going to move back into the cities, which means that maybe the opportunity, if you're an investor, is to buy in the urban areas now, right? You always want to buy fear. That's what Warren Buffett says. So any other predictions? Any other predictions before we wrap it up?
I think that it will take another year to find homes for all of the people who are looking to relocate. Many residents who are moving out of the city have been thinking about doing it, and this has really gotten them off the fence, whether it be to buy a second weekend home or to retire out to the country.
Mm-hmm. Mm-hmm.
So although inventory remains a challenge, it doesn't seem to be stopping the strong market that we're
Right.
seeing out here.
Right. Okay, good. So the next time we check in is going to be a month from now. So that'll be the third Tuesday in August. So we'll have a little bit more indication on how the back to school sales are going and whether or not there's still as much showing activity as there is. And it's going to get more and more interesting as the year sets on here as far as these housing market updates go, because we're really moving into new territory that we've never been at before. By all accounts, none of the schools in our area are going to open up full time come September. Just not going to happen, so far as I can see. And then the question becomes, well, at what point will they open? So, and now there's other just very interesting factors like talks of vaccines coming before the end of the year, and what is that going to do for people's level of confidence in dealing with the virus? So there's just so many important things that are happening. So stay tuned with the housing market update. We do our best to bring you the facts and figures with, straight advice on how to navigate through this environment. All right, everybody, let me show the screen real quick before we go of everybody's contact information. I'm sorry, I'm a little bit off the beat here because I lost the use of our production engineer today, but here is our panel. Here's their contact information. These are all great people. Thank you, Pamela Zakowski, Ken Olasino, Christy Anderson, Tony Kroish, and Karen Gonin. For those of you who are looking for a great realtor or a great loan officer, here it is. Call one of these people. Thanks so much, guys. Talk to you soon.